want to just kind of put some things into perspective here for you. There's changes happening behind the scenes, under the hood. A lot's going on, so bear with it because I'm drastically close to perfection with YouTube. I'm working around them. I'm actually dancing around them right now. But I think the way that I've got it set helps me avoid their stupidity using the way I've tweaked this software out. Then it's just unfortunately a matter of hitting switches. That's KD for those that are from the old school. Anyway, I got a request from a follower on Twitter to do coverage on a cryptocurrency. And the fact that we're in the red, please don't beat me up for doing a coverage on a crypto while we're in the red. I'm not doing this one for any other purpose than to, first of all, we are a podcast for the people. We like to answer requests to cover various cryptocurrency projects, hopefully keep people safe, give our swag analysis. That's what the swag's for, is to give you our thoughts from our point of view. Mind you, we are looking at it from a different lens than some people might be. Some other people might not necessarily agree with the way that we do it, in all honesty, and I'm okay with that. I'm not presenting myself as, perfect analysis or any of that. I'm just a regular investor just like you. This project's called Lucky 777 Finance. And Lucky 777 Finance, I'm going to pull it up here. This site here, when you take a look at this business, let me move my window out of the way so you can see what it's doing. This project fancies itself as a fork of LockPay Finance. And if you know LockPay and you've heard what I said about them, I said that I don't think it's a very good project. I don't think much of them. And I think it's kind of garbage in my personal opinion. Pulse Chainer writes, Kizo Ronin and Pulse, I believe it is, only crypto is touching until Pulse Chain launches. Maybe Hex if it falls to 3 cents. And I'll get back to that one. Let me get past this one because it won't take that long. And I want to answer some of what he's saying there. This Lucky 777 business, as you can see, it's doing the unrealistic APY. And I'll give them kudos for one thing. They're at least admitting that it's a gamble. For that, they have my respect because many of these projects, these cucarachas, do not admit that they're basically a gamble. And that bothers me. I like admitting it's a gamble. Their whole branding is around gambling. It's a casino type concept. That's what it is. That's what it's always going to be. This has not launched yet. It's going to be on the Binance Smart Chain. And just all the same things are here. Lock to earn, unrealistic APY, earning every day, compounding, the ability to, cash out to fiat. Of course, that's everything. They refer to security and KYC. I'm going to come back to those two things. Later, they give a matrix of what you can expect off of an investment. This makes a lot of assumptions. And it's important that we understand the assumptions and how the assumptions work. The assumption is that you put a certain amount of money in there, and after you put this amount of money in there through compounding, you are expected to get a certain amount of money above and beyond this. That's the thought process behind this. So this matrix that they've got broken out cannot necessarily be proven. And as such, they say actual return depends on market conditions down here in small print, which is true. You cannot say that it's going to do this. Here's where I had some issues with this, just in the site. I'm only on the site here when I have these problems. Right here, quote, 7 uses LockPay's first-class anti-dump mechanism. Now, first of all, LockPay was not the first to do an anti-dump mechanism, and LockPay was not the first to do it the way that they're doing it. LockPay's mechanism is not unique, nor is it a first starter. There was a token, I actually got a question, I believe it was Jeff Capital, had asked about Hold Token. Hold Token had a similar type of mechanic in the sense that it was preventing you from being able to sell this guy. It was trying to force you to hold it. So I want to just be clear that the LockPay mechanism is not unique in that regard. They just put a twist on it by still allowing sells at a lower percentage per day. That's what's unique. So just it's important to distinguish that they were not the first to do anti-whale or anti-dump. They won't be the last. Their mechanism is slightly tweaked of what's commonly been out there. Everything else is pretty much the same as what you're used to. And mind you, LockPay is a fork of Seifu, proven by RugDoc. As a fork of Seifu, proven by RugDoc, what that means to you is that we have this token that's essentially expected to do what Seifu did. My guess is that it's going to struggle to do so because of, number one, the bear period, but number two, I believe that a lot of this is unsustainable, not just because of the APY either, just in general. I think a lot of these tokens are going to struggle in the big picture, all of them, because they're not going to be able to sustain what they're talking about without volume. And then volume makes it harder because in bear periods, you're not getting the volume that would support what you're saying. I'm not wishing them ill. I'm saying what I observe. Almost all of these projects, of whatever variation, Drip, Titano, Seifu, Libero, almost all of these have struggled now in the bear period because the volume is down. That's their gap. That's their weakness. There's actually a site that tracks all of these, quote, Titano forks, and it's very enlightening. If you look at it, it says, well, wait a minute, we're going to have some problems here because we can't support what we claim to do, and they just shut down. Either they rug pulled it, or they never launched, or Ascent Protocol was another one. It wasn't APY, but it was another one that couldn't sustain what they claimed. And so they tried to pre-sale. They didn't get enough interest. I don't think they ever tried again. There's Quantera, never recovered. There's another one, starts with a T. All these ones have struggled to make it work. It might have a temporary pump, might last for a couple of months, does not last long term. So this one, the other thing about this one, they set up a telescam recently. I wasn't too much a fan of that, but I understand why they did. Their, quote, white paper is the garbage to get book. So they're already on my bad side because they did that. And there's nothing in here that is unique to what they're doing or how they're doing it or who they are. And I was concerned because, again, I like to see the who of a thing. Well, this business, what they've got going on, they set up a Discord where they had first announced it. And then in the Discord, they're talking a little bit about what they were doing. So they set up, and they told the story, so they were transparent. They told the story that they set up KYC with a company, and I forget the name of it, but it's a newer DeFi organization. There we go. Veritas DeFi. And they told the story that Veritas DeFi was apparently, they hadn't had enough traction. The third company that they KYC'd rug pulled on them. And of course, that hurts your reputation because allegedly you're supposed to do this. But when that company rug pulled on them, they actually turned the information over to authorities to help catch the scammers. So now I'm kind of mixed because I'd never heard of Veritas DeFi, and I never heard of a KYC company working to try to help the investors stay safe if something were to happen. The project, this Lucky 7, then said, okay, here's what was in the KYC. They had the full name. It doesn't let me highlight, but the full name, their address, a Zoom call, so that's putting a face to the name, 2 forms of ID. I have questions on that one because if the ID was not necessarily accept, like in some countries, right? The driver's license, social security card isn't any good because there's no photo. Driver's license is good, passport's good, right? So it doesn't say what ID. That would be a concern. And then it says 2 forms of social media. The problem is if telescam's one of them, there's no credibility. Like I would want one of the forms must be a LinkedIn account or something. Something that forces you to put a face and a name and your credentials. They don't spell out whether those were a part of it. But what they said was that as we did this KYC, we're working with this company because, quote, they offered me a discount on their service because they're new and wanted to build up a name for themselves. And then, of course, this rug had happened. I have a concern about the discount offer because it feels unethical. If you're a KYC company, to reach out to a startup and say, hey, we'll do the KYC with you and we'll give you a discount on it, feels unethical. That's not Lucky 7's fault, Lucky 777. I'm saying that I don't like to see that from the KYC company. I don't like to see that from the audit company. They should be independent and you should be forced to pay the full rate. Now, what you might do is you got to pay the full rate up front because of ethics. However, we'll give you a discount on future services when new staff starts, for example. Sure, I'm cool with that. Not up at the front, not in the very beginning one. Also, this information isn't on their site, which I like. Face, name, LinkedIn on their site. He said that somewhere in here, somewhere where he said basically that there was somewhere where he said that putting his stuff out there was not legal, which made me think that it had something to do with the country he was in. And so he's pairing up with this crypto truth bombs. Never heard of him. This guy has some videos here and said that crypto truth bombs, whoever he is, apparently, yeah, right here, publicly doxed, but the law prohibits this from happening. So I don't know what country that would be in, because it's certainly in the U.S. Says that Truth Bombs has the okay to release the full name in social media if there's any form of a rug pull. Now, the challenge is I personally don't know Crypto Truth Bombs. Don't know if he's worth a damn. Don't know if he's in cahoots or collusion. There's a lot of question marks. I'm not accusing. I'm saying that normally I wouldn't want it to be a member of the same community, and I wouldn't want it to be a YouTuber or any of that kind of stuff. I would want you, I understand what you're trying to say, but it's not illegal to put your face and your LinkedIn account on your site. That's not illegal. Everybody does it. So let's say I don't accept his answer. I understand what he's trying to do, but I don't accept his answer. So reading on, then they said there's going to be multi-sigs for the wallets for the various contracts. If you heard my coverage of LockPay, the main complaint I had is that Car Salesman 2.0 has control over a central wallet that would basically allow him to dump on the project. And that made me very nervous because, again, he could just take it and run, and he is not subject to that fee. So having the multi-sig is good. Having separate wallets is good. I'd want to see that the owner wallet doesn't have a lot of supply. And again, this isn't live yet, so there's no way to vet that. We have to wait till it goes live. I guess in summary, my feedback for them would be, it sounds like they're trying to do the right thing. It sounds like they're trying to launch it legitimately. Without seeing the contract, there's no real way to know if it's going to be a good thing or not. But the communication, I think, is good. Having a Discord presence, I think, is good. I don't really care for Discord, but it's better than Telescam. Having a Discord's decent good. The website's certainly better than Car Salesman 2.0's flashing buttons of a thing. It's a decently professional website. I think it's very well built from what it is. Feels like an actual legitimate something, unlike the other scam. They're essentially tongue-in-cheek acknowledging that it's a gamble, so I respect them for that. And we'll have to wait and see with the contract how they're pulling off this type APY, because I'm skeptical they're going to be able to sustain it. My guess is they're making assumptions about volume and buy-sell activity and behavior. My guess is that the supply is heavily constrained. My guess is that they'll have a lot of FOMO. And obviously, if they have the ADM, because they even call it the ADM too, they call it the same thing, like with LockPay. My guess is somebody's going to figure out how to get around it and start dumping off of it. My guess is it won't sustain for the duration of 2022. That's my gut speaking. I hope I'm proven wrong, but that's my gut speaking. For these guys, if they want the smoke and they want to talk to me about the project, I'd love to have them on the show. I would immediately tell them, hopefully you understand that there's significant issues, with the LockPay setup. It looks like you're trying to fix it, and I give you kudos for doing that. I want to make sure people are kept safe and that they're not harmed by anything that you're talking about. And again, nothing stops you in any country I'm aware of putting your name and your LinkedIn account on the site so people know who you are at a basic level. You don't have to give your address, but your name, your face, LinkedIn, and what country you're from. I don't see a problem doing that. That would help seriousness of the project. That, hey, we're here and we're going to stay here. And I think the way they built it, I think it sounds good for the temporary pump. If we get the bull run in June that I suspect, this might go somewhere. If we don't, I think this one's going to struggle and it's going to either die off or do a migration to a V2. Lucky777.finance is the site address if you want to take a look at it. Lucky777.finance on the Binance Smart Chain if you want to look at that one. Question in the chat. I will circle back on the Ronin and Pulse. Pulse Chainer also says Libero could be the one to turn it around and be strong. Here's my thoughts on Libero. I believe that the miner that they are working on releasing is going to be a problem. I still maintain it's going to be a problem. I think it's good for whales, certainly, but I think it's going to be a problem for anybody that's that's a hold, basically stuck in the bank. The only way that they're going to turn that around, the only way they're going to be able to turn that around is increasing the burn speed and quantity. They've got to get the burns knocking out much more supply than is the case. The other problem is that Libero does not, they can mint more Libero, and that creates a risk because the whole point, basically with the way that they built it, they're targeting what it looks like a penny. So they do the burns, right? And then the supply goes down, and then they may mint more based on the price movement. So they're trying to get the price to be a certain way based on the rebasing. If they were to say that we're not going to mint any more Libero and we're going to just let it go constrained, that would be good. I don't think they're going to do that. I think what they're going to do is they're going to go all in on Libera. And by going in on Libera, they're going to expect to burn, and they're creating Libero to be the long play for the next 3 to 5 years, using Libera as the short-term pump. That's why I think that Libero, the eco, is going to have problems, because if they take that approach, you are essentially turning it into the whale project, because you're just catering to what the whales want you to do instead of fixing the underlying issue that you caused. Like, they caused this whole fiasco with the way that they structured this instead of what I would have wanted to see, which is let's step back and understand what is it we're trying to do. Are we going to be a long play? Or are we going to be a short pump? If we're going to be a long play, you should have gone with the bonding and gone all in with the bonding. And I think they could have tied the bonding from Libero to Libera. One thing they talked about in the beginning of before Libera was a thing was creating a pair for Libero and Libera, a liquidity pair. Had they done that, you now could have spiked the price of both, because it would have forced people to buy both in order to zap it into the liquidity pool. I don't know what happened to that one. Instead, I see the miner, and then all of a sudden it's all in on Libera, and we never got the other two exchanges, Bitmart and LBank. So is it possible it's going to turn around long term? I go back to my previous coverage where I said told the story about Garuda, Swap, and Cerberus, and then Epic Hero, and then Multiverse, where it feels like they try a thing and they don't get the results they want as fast as they want, and then they give up, and then they go to a new thing, a new shiny. That's what Libero essentially was. It was a new shiny after they didn't get what they wanted on Multiverse. But Multiverse was and is still a strong project, but they're not investing in it. Well, that means that the same thing could happen with Libero, where they just give up. Remember, they're still working. They still haven't done F Libera Bank. So they're doing more sprawl. We know that. And since F Libera and F Libera Bank are not part of the Libero, it's a completely different token. You could be robbing Peter to pay Paul at that point. Last point I'll say is that I think Drip and other similar projects are what's causing them to react this way. And that's unfortunate, because I think those projects are garbage, to be honest. Good people, but I don't think that they're sustainable long term. So we'll have to see how it all goes. And then as far as Kizo Ronin, I've not heard of Kizo Ronin myself. Pulse Chain, the challenge I only have, I mentioned this on the previous, Pulse Chain's main issue I see is they had the delay just recently. Supposed to launch end of May, I believe it was, and then he announced the delay. Well, he had said, I want to say as far back as March, he did that video, and he's in the champagne room or whatever, and he's saying, we're ready to go now. We can go now. We can launch it right now. We got it all done, And then all of a sudden, it's like, well, we got to delay it. So he's already kind of put a bad taste in people's mouths, because he said one thing and it turned out to be something else. I don't think he meant to be malicious. I think he was trying to convince people that it was on track. There's a better way to have done it. So I'm saying that I think Mr. Richard Hart should do a better job of just telling the truth, because it's better to tell the truth up front than it is to lie about it and then get caught out later. Satama had to learn that lesson the hard way. Hex. Again, Hex is one of those, it was backed by stable coins predominantly, and yet it still managed to dump. I don't know why. I don't know how. I don't know what caused it necessarily. I looked, I didn't see anything. We'll have to see where that one goes. have any concern necessarily, but I do think that there's something there with it as a token and the bigger ecosystem. And I do think that with the sacrifice, I think people will be better off long term. Short term is where we're going to have some concerns potentially. Time will tell. The bear season's got to pass for all these. Bear season's got to pass before we really know any better. And I'll hang out for any other questions. It seems like everything's looking good and sounding good. I have to fight the switches for YouTube, but everything looks like it's working like I needed it to. Any other questions that we might have, either on Discord or on YouTube? Sure wish that Discord would stop spamming me with the same garbage. Like it otherwise. Doesn't look like it, and that's okay. For my portfolio, I'm sticking with my fave five through the bear season, giving them a chance to show and prove, and we'll see if we get what I hope to get in the future, which is back on track with the investment strategy, the long-term investment strategy. I hope we do, but I don't know for a fact. It feels like there's a lot going on in whatever's happening, especially with Ethereum and the 2.0. Like things are just being delayed and there's no real clear reason why that would be the case from what I can tell. So we'll have to wait and see if things sort themselves out. And if they don't, we'll have to see what that means long-term for the future. Anywho's, that's mostly all I had. I'm following the UST Luna situation at a distance just to see what they're going to do. I know what the plan is, but I know a lot of CEOs are coming out against that garbage. I know there's a lot of chatter about sending this dude to jail and taking his assets. I know there's a lot of smoke around it. And then there's the rumor that Bitcoin might jump back up above 30,000, which would cause a bull run on it. And of course, if we have a bull in the China shop on Bitcoin, everything else is going to run. And that's going to be interesting to watch out and see if we get the run that we expect to get or if we see it crash and burn miserably. Anyways, let me go ahead and wrap this up here for everybody. CryptoTalkRadio.net if you want to check it out on all platforms. This will then be uploaded to YouTube, Rumble, and Odyssey if you want to check it later. I know not everybody catches it live, and that's okay. For those that join live, thank you for joining live, and thank you for the quick questions. I'll take a look at Kizo Ronin, see what it's all about, and see if it's worth a damn, frankly. I'll take a look. Honestly, will. See you guys. Oh, by the way, real quick, I almost forgot. If you are staked in Libero Bank right now, you will have noticed that the value of what you have in there significantly tanked. And just in case if you're curious, Libero's whole backing, everything around Libero, the liquidity pool and everything else is solid. So the problem with theirs is not around the liquidity pool. The problem with theirs is sell pressure. Sell pressure has been constant. It's been regular. Does not seem like it's lightening up. And people have been curious when it's going to end. I don't have that answer. I will say that normally you would have a bottom resistance. We don't seem to have hit that yet. The price of Libero is already lower than its pre-launch price, if I recall correctly. I'm pretty sure that's true. So you need to make a decision for your own sanity, whether, obviously if it's in the banks, nothing you can do with that. But you need to make a decision about whether you do any future investments, understanding it's likely going to go down even further in the short term. When they launch this miner business, I expect even further drops because, again, if it's true what I see, which is that they're taking the Libero rewards and they're dumping it to buy into Libera, that means we're going to see more of that arbitrage happening, which means that Libero is going to continue to have sell pressure for the foreseeable future. I think they're just counting on the burns. I said that the burns are not going to be significant enough for the next year or two. I sincerely hope I'm wrong because I know a lot of people bought into Libero off the green and they have a lot locked in there and there's nothing they can do because of the way they built this. So I sincerely hope I'm wrong. But just for you guys, be aware, I don't anticipate an end of the road in the short term for Libero's dive because of the way that, if my theory is correct, that they're basically just arbitrage all over the place and they're selling the rewards back in. Unless they decide to fix that model, I think you're going to continue to see sell pressure for the foreseeable future. So just that side note. I'll check you guys out later. Don't know if I'll be back in tomorrow or not. Depends on if something comes my way or I get a request to do coverage. See ya.